Welcome back to the deep dive. Today, we're tackling something pretty tricky in the current market. We're trying to find an artificial intelligence stock that's, actually profitable and potentially undervalued.
Yeah, that's the needle in the haystack right now, isn't it? Most AI plays are either, well, super expensive or still deep in investment mode, burning cash.
Exactly. So if you've been watching the headlines, finding both is tough.
But our sources today are pointing towards an interesting one, an outlier maybe? Micron Technology, ticker MU.
Micron. Okay.
And this isn't just about finding a company involved in AI, it's about one the market maybe hasn't fully caught up with yet.
Right. So that's our mission for this deep dive.
Yeah.
Let's unpack these sources. Why Micron? Why is it being called an outlier? And maybe more importantly, how does it plan to keep up this, well, frankly, massive growth, especially with all the geopolitical stuff chipmakers are dealing with?
Well, you have to start with the momentum. It's been incredible. The stock's performance in 2025 alone is stunning.
What are we talking about?
Shares are up something like 140% year to date. Just remarkable.
140%.
Yeah. But here's the kicker. Even after that huge run, the data suggests it might still be trading at a pretty significant discount compared to, other big tech and AI names.
Okay, 140% run usually means the easy money's been made, right? So that discount piece is key. Why would the market still be skeptical? What kept that valuation relatively low despite such a rally? Let's dig into what actually drove that initial surge. What happened in their last fiscal year?
Okay, so fiscal 2025, which ended back on August 28th, that really gives us the first part of the answer. Total revenue climbed 49% from the year before. Pretty solid growth, hitting $37.4 billion.
49% top line. That's strong.
It is, but honestly, the top-line growth isn't even the main story. It's what that growth did for the bottom line. That's what really moved the stock.
Right, because memory chips, historically, it's a cyclical business. Growth without profit doesn't mean much long term.
Yeah.
So how did that revenue translate into earnings?
Well, they saw a really sharp improvement there. It came down to a much better pricing environment, especially for their more premium products, their non-GAAP earnings per share that jumped massively. It went from just $1.30 per share the year before all the way up to $8.29 per share in fiscal 25.
Wow, from $1.30 to $8.29. That's a huge leap.
It is. And what's really fascinating, or telling, I guess, is the operating income margin. That jumped almost 4 times. Went from low single digits into really healthy double-digit territory last fiscal year. Tight supply, healthy demand.
Okay, that margin expansion feels like the core of it. That's what might separate this new Micron from the old one. Because historically, memory chips were boom and bust. Great margins when supply was tight, then boom, oversupply, prices crash. Are we just seeing the good part of the cycle now? Why should we believe this time is fundamentally different, that we're not just heading for another supply glut in a couple of years?
That's the million-dollar question, isn't it? And the sources really try to address that. The argument is the product mix has changed. See, historically, profits depended on commodity stuff like basic DRAM chips, volume over value almost.
Right.
Today, the real profit engine is something called high bandwidth memory HBM. That's a specialized high-performance product, much higher barriers to entry, and crucially, different pricing power.
Gotcha. So the jump from $1.30 to $8.29 in earnings wasn't just because general memory prices went up. It's because the mix shifted heavily towards this specialized higher margin HBM. That structural shift in demand is the core thesis then.
Exactly right. So let's talk about HBM for a sec. What is it?
Yeah, please.
It's memory specifically designed for the most demanding AI jobs happening in the cloud. Think of it like this. Normal computer RAM is like a big multi-lane highway into a city. It handles a lot, but can get congested. HBM is more like a dedicated, super high-speed train line built right next to the engine doing the work the GPU, or maybe a custom AI chip.
Ah, okay. So without that super fast dedicated connection, the expensive AI chip, the GPU that costs maybe $40,000, it gets bottlenecked, it can't run at full speed. So Micron's HBM is like a critical enabler.
It's the critical enabler in many cases. It's a bottleneck component.
Right.
And you can see its importance in the numbers for the specific unit that handles it. Micron has this cloud memory business unit. Let's call it CMBU. That's where the HBM sales live. The growth there is just astonishing.
Astonishing.
CMBU revenue jumped 3.5 times in the last fiscal year. 350% growth, reaching $13.5 billion.
3.5 times in one unit. That's
Yeah.
huge. What does that mean for supply and demand going forward?
Well, the key dynamic right now is that demand for HBM is growing way faster than supply can keep up.
Yeah.
And that does two things immediately. One, it keeps prices and margins high, obviously.
Okay.
And two, it forces Micron to pour money into expanding manufacturing capacity just to try and meet the demand. They're constantly playing catch up.
And they're not just selling this into the general market, right? They're directly supplying the big AI players.
That's a crucial point. Management says they have 6 HBM customers currently. Now, given how specialized this stuff is, that almost certainly means they're supplying the leaders. Think NVIDIA, Broadcom, AMD. All those companies designing the cutting-edge AI processors need Micron's HBM to make them work effectively.
That direct link gives them much better visibility on future demand, doesn't it? Compared to the old days of selling generic DRAM.
Absolutely. It's not the same guessing game as the commodity market. And that future demand, according to the sources we looked at, isn't showing any signs of slowing down.
What do the projections say?
Well, Goldman Sachs, for example, they're forecasting another 23% jump in HBM demand just from GPUs next year. But here's the really interesting part. They see an even bigger jump, like 82%, coming from custom AI processors.
The chips the big tech giants like Google or Amazon design for themselves.
Exactly. And Micron seems pretty confident about this. They're saying they expect to basically sell out their entire HBM production capacity for calendar year 2026 within the next few months. They're locking in orders that far out.
Locking in supply almost 2 years ahead. That does provide a buffer against those old cyclical fears, doesn't it? Lends credibility to the this time is different idea.
Yeah, it really stabilizes things, reduces inventory risk, gives them pricing visibility. It's a different model.
Okay, so the demand side looks incredibly strong, especially for HBM. But chip companies always face geopolitical risks. That global supply chain is fragile. Let's switch gears to the China situation. The sources mentioned a specific headwind there, a pivot they had to make. What's the story?
Right, this is important context. Micron seems to be making a, let's call it a tactical retreat from one specific part of the market there. There was a Reuters report indicating Micron plans to stop selling its AI server memory chips specifically to customers based in mainland China.
Okay, why?
Well, it follows that ban from Beijing back in 2023, where they restricted certain foreign memory products used in critical infrastructure inside China.
So losing access to the AI server market in China.
Yeah.
And sounds like a pretty significant blow, no? What's the actual financial impact?
It's not insignificant on the surface. In the last fiscal year, Micron pulled in about $2.6 billion in revenue from mainland China overall. That was roughly 7% of their total sales.
7%.
Yeah. But the sources tend to frame this more as a minor setback, and the reason is their mitigation strategy.
Okay, but hold on. Is $2.6 billion really minor? And doesn't losing potential access to a huge future AI market like China create a longer-term disadvantage?
That's the key question. And the pivot strategy is their answer. Micron basically realized, okay, the AI server memory capacity we can't sell into mainland China anymore. We can immediately redirect that to other markets like the US and Europe, where demand for HBM and other data center memory is already through the roof. They're just reallocating that capacity.
Oh, so they're shifting where the chips go, not necessarily losing the total sales volume, optimizing geography.
Precisely. And it's also crucial to understand the limits of this move. They're still selling data center memory to Chinese companies that have operations outside mainland China. Think about big multinationals like Lenovo, for instance. Yeah. And critically, they are also continuing to sell other types of memory for cars, smartphones, PCs within China. They're just stepping back from that specific restricted AI server segment while keeping other business lines going.
Got it. So it sounds like a calculated risk management move in the short term. Okay, let's bring this all back home to the valuation then. We've got blistering growth, much better profitability driven by HBM, and what sounds like a managed approach to the China risk. Yet, you said the stock is still trading at a discount. Why? What's the market still worried about?
Yeah, this is where it gets really compelling if you're looking at it from an investment angle. Despite that massive 140% gain we talked about and all this evidence of fundamental change, Micron is currently trading at just 24 times its trailing earnings.
24 times. For a company right at the heart of the AI build-out, fundamentally changing its profit structure. That does seem surprisingly low.
It really is, especially when you benchmark it. The NASDAQ 100 index, packed with tech stocks, trades at a much higher multiple, around 33 times trailing earnings.
Okay, so there's definitely a gap. The market's pricing in some skepticism. What could it be? Lingering fears of the old cycles? Competition, maybe.
Probably a mix of those. Historical execution risk, maybe worries that competitors like Samsung or SK Hynix will eventually flood the HBM market and bring prices down. That cyclical ghost is hard to exercise completely.
But the analysts cited in the sources, they seem to think the growth story is far from over, right? Which makes that 24x multiple look even cheaper on a forward basis.
Oh, absolutely. The analysts seem convinced the historical fears are misplaced now. They're forecasting, well, outstanding growth to continue. The consensus expectation is that Micron's bottom line could actually double again in fiscal 2026.
Double again.
Yeah, so if that happens, the forward earnings multiple is obviously much, much lower than the current trailing one.
Okay, so if you believe the secular growth story, that HBM demand is structural and not just cyclical, then that valuation gap should logically close over time. Let's walk through the specific upside scenario the sources laid out. What's the bull case look like?
All right, so this is the sort of aggressive but potentially achievable scenario analysts put forward. It really hinges on one key thing. The market finally recognizing Micron deserves a valuation similar to other high-growth AI stocks. So let's assume two things happen over the next year or so.
Okay.
First, let's assume Micron's stock starts trading in line with the NASDAQ 100 multiple. So it gets re-rated up to that 33 times earnings level. The market accepts it's a core AI player now, not just a commodity chip maker.
Assumption 1. Multiple expansion to 33x.
Got it. Second, let's assume Micron delivers on those earnings forecasts we just mentioned. Analysts predict they could hit around $16.68 per share in earnings by then.
Assumption 2. It's $16.68 EPS.
Okay, so if both of those things happen, Micron executes, hits the earnings target, and the market rewards it with that higher multiple, what's the potential outcome for the stock price?
Yeah, what's the number?
The analysis suggests the price could potentially reach $550 per share.
550.
Yeah.
From current levels.
Yep.
Which would translate into potential gains of around 170% from where it is now. Now, obviously, that's a projection. It relies on those assumptions holding true,
Sure.
but it's built entirely on the idea that the current discount, likely rooted in those old cyclical fears,
Yeah.
just doesn't make sense anymore, given the HBM-driven secular demand.
That's a huge potential upside based on the market catching up to the company's internal transformation. Okay, so let's quickly summarize our deep dive then. Micron seems to be making a successful shift, moving from being just a cyclical commodity supplier to a really profitable, essential provider for AI infrastructure. They've got amazing traction in that critical HBM market. They seem to be navigating the China situation effectively by redirecting capacity, and yet it's still trading at a noticeable discount to the broader tech market.
That wraps it up nicely. But maybe one final thought, connecting this back to the bigger picture for you to think about.
Yeah.
The sources we looked at predict something truly massive, potentially $4 trillion being spent on AI infrastructure by the end of this decade. $4 trillion.
Wow. Now, that spending has to happen almost regardless of which specific company makes the absolute best GPU or which AI model wins out. So what does that imply? This huge, consistent, underlying demand for the essential components like memory, the things that are often less flashy, less discussed than the GPUs themselves. What does that imply for the long-term risk versus reward for these fundamental suppliers? These enabling components are crucial, maybe even overlooked sometimes. That's definitely something worth mulling over as this whole AI boom continues to accelerate.